Good morning, everybody, and welcome to our flavorful Expert Insight webinar today. So with everything that happened last week and everything actually that's been happening over the last couple of months, we thought this would be a great opportunity to invite our economists and folks from our financial sector, along with new investment opportunities that have sort of risen out of what's happening in South Africa, and bring them together in today's Expert Insight webinar that looks like an economic overview, impact and opportunity. So I'm very fortunate today to have with me a panel of experts. And thank you so much to everybody that's joined us this morning to be part of this. And thank you so much to the panel. Just before we introduce everybody, a little bit of housekeeping. We all know how it works, but let me just run through it again. At the bottom of your screen, you will see a little box that says chat. Once you open that up, on the left or right-hand side of your page will be a chat box. Jamie's busy posting in it now. Select the option that says host and panelists, and please send us your questions. The wonderful thing about these live webinar environments is that we can really then discuss some of those burning issues, and you've got the right people in front of you to answer the questions with the right relevant information. So during the course of the webinar, a few polls will come up. The poll question will pop into your screen. If you could be so kind as to answer it. And once you've done that, you can click on the red square on the corner and it will take it away. The guys on the panel, you obviously can't answer, but please click on the red block and it'll be out of your line of sight to not bother you. This will happen throughout the duration of the webinar. So let's get started. When thinking about opportunity and economics, we thought the two folks that could really bring something to today's webinar, Izak Odendaal, who is an investment strategist at Old Mutual Managers. He is going to talk to us about where we are with the changing of the guard and the new political movement that's happened within our government. And then, of course, Mason Lecuona from Signal View Boutique Hotel is going to be talking to us around what is a very exciting hotel investment for South Africans. And I don't want to give too much away because he is the best person to talk to you about it. So let us quickly get going. Izak, let's start with some good news. Some good news, Izak, well, let's hear first what we have to say before we predict whether it's good news or not. Good morning.
Yeah, thanks, Louise. In the old days when we were still doing presentations in front of audiences, you'd often walk up to a stage and to applause, and I'd always tell people, well, maybe you should just listen to what I have to say before you give me your preemptive applause. But anyway, thank you for the warm welcome. I think I've got 15 minutes to talk about the South African economy. And I'm going to start just talking about, as you said, the recent changes in the cabinet. Then I'll touch on broader views on the South African economy. And lastly, just sort of my views on the investment landscape and some investment opportunities for South African investors. So if you cast your mind back to December of 2015, the 8th of December to be precise, that was when President Zuma at 8 o'clock fired Nhlanhla Nene, who was then the finance minister. In the next 3 days, the rand fell from 14.50 to 16 to the US dollar. The 10-year government bond yield, the rate at which the government borrows money, spiked from 8.80 to 10.50%. So a huge spike in the borrowing cost of the government. And of course, it very quickly led to South Africa being downgraded by all the major ratings agencies. Okay, this is not like that. This was a change, I think, very much coming from Tito Mboweni himself. He was a reluctant Minister of Finance over the last, 3 years. I think he spent a lot of time working from home long before it became fashionable in his farm in Magubaskloof. And I think he's for some time been pressing to be relieved of his duty. And last week, I think the president finally acceded to that request because of all the other changes that had to be made to the cabinet anyway. So I think that was the time is moment to do so. Now, the new finance minister, Enoch Godongwana, is not an unknown entity. Again, if you think back to when Des van Rooyen became our finance minister, he was a backbencher, an unknown quantity. Godongwana is a heavy hitter within the ANC. He's the head of the ANC's Economic Policy Committee. So he's very much responsible for the policies that the party has put forward to the government to implement anyway. He's a known entity as far as foreign investors are concerned. I think the important thing is that there will be policy continuity. So in other words, it's not as if he's going to come in and do things very differently to Mboweni. The important thing is that it's the same set of policies that get implemented. And of course, and we can talk about those policies in a second, but I think the final point to notice is people often say that the finance minister has to be, an economist or someone with very strong financial markets experience or so on, which, by the way, Godongwana does have a master's degree in economics, so he's no fool. But the most important characteristic that a finance minister needs to have is the ability to say no. He is the one that controls the purse strings. And obviously, all his colleagues in cabinet are continuously coming up to him and saying, I want to spend money on this, I want to spend money on that. And it's his job to say, no, we don't have the money. And in order to fulfill that role, you need to have political clout. So for me, the most important characteristic of a good finance minister is the ability and the willingness to say no. And I think, given his position within the ANC, I think Godongwana is the right man for the job. Obviously, there is some controversy over things that happened a couple of years ago. You can all read the articles. I don't know any more about what happened than you did. It just seems, from my reading of it, that he got involved in some sort of investment scheme that ultimately failed. But it looks like he paid back the money that was lost. So, yeah, as I said, I don't know any more about that than anybody else. It does appear that we are quickly running out of politicians that are squeaky clean. But I think that is also the nature of politics these days, not just in South Africa. So the main challenge for the finance minister, and now kind of branching off into kind of broader economic issues. The main challenge for the finance minister is South Africa has a lot of government debt and continues to spend a lot more than it receives in tax revenue. And we call that difference the budget deficit. So we still have a very big budget deficit. And as you can imagine, every year that you run a deficit, you basically accumulate debt. And then there's the additional problem that we have very high interest rates. So that the cost of that debt compounds very, very quickly. It's one thing if you are America and you can borrow at low interest rates, then, by all means, borrow and spend as much as you can. And in fact, Americans are in the process of implementing yet another big fiscal stimulus package in the form of a big infrastructure plan, about $1 trillion that's currently working its way through Congress. But they can do it because they're borrowing at 1.5%, less than 1.5% interest over 10 years. We need to pay 9% interest over 10 years. So it's extremely expensive. And therefore, the main challenge for the finance minister is to reduce the budget deficit so that, number one, we're not borrowing as much, but number two, the reason our interest rates are so high is because the market is worrying about excessive borrowing. So there's a real chicken and egg problem. You need to be able to lower your borrowing, your rate of borrowing, in order to lower the interest rate. And if you can do that successfully, you can actually get kind of a nice virtuous circle. Because lower interest rates obviously feed into higher rates of economic growth. Higher rates of economic growth feed into more tax revenue for the government, and that just naturally reduces the need to borrow. So that's the big challenge. The big challenge is to kind of slow the rate at which government spends, bring that down, but also raise tax revenue. And tax revenue, as I said, is very much a function of how strong the economy is. It is also a function of how effective SARS is. Clearly, there have been some improvements, obviously, under, as the Nugent Commission found. I mean, SARS was really laid to waste in the last few years of the Zuma administration, and that there's a rebuilding process that's happening, and that is also helping. Now, of course, none of us particularly want SARS to be effective. I suppose we prefer to pay less tax, but I mean, from the point of view of the government's finances, you need an efficient tax agency that can collect taxes and fund the government. So if you then think about what's been happening in the South African economy, I think clearly we are coming out of this COVID pandemic. We are still in the third wave, but each successive wave has had less of an economic impact. I think the first wave really was everybody just panicked, from you and I to policymakers. There was just this great sense of fear, and the economy basically came to stand around March, April, May last year. And since then, we've been trying to claw our way out of that big hole. The second wave, even though potentially more devastating from a health point of view, it had less of an economic impact because the panic was less. Government didn't shut down the economy, and as consumers, we kind of started getting used to, carrying on with life, transitioning to working from home, businesses transitioned to kind of more online, et cetera, et cetera. So now we're in the third wave, and I think it's almost, again, devastating from a health point of view, but from an economic point of view, kind of life goes on. We've also had the recent unrest in KZN and parts of Joburg. I mean, obviously that is devastating, big blow to confidence. I think especially for businesses around Durban and Pietermaritzburg. Lots of lost shelves being looted, lots of destruction, and so on. However, I think the economic impact of that, it's easy to overstate in the short term. In the sense that, South Africa is a 5 trillion rand a year economy. So yes, if you think about the damage that was done, it runs in the billions, but not, it's kind of a drop in the ocean relative to the entire size of the economy. And also remember that even though you're going to have a negative impact in the short term, so when the economic numbers come out for July and early August, they're going to be negative. But then there's a rebuilding phase, and the rebuilding phase kind of helps economic activity. So obviously the shelves were looted, but now they need to be restocked. The warehouses were burned down, but now they need to be rebuilt. So that is kind of a kicker to economic activity. That's the short term. The longer term consequence is still unknown. I mean, the longer term consequence is, does it impact business confidence permanently? And I think to answer that question, you need to ask yourself, was this, is this a lagging indicator or a leading indicator? In other words, is this something that tells us about the state of the country over the last few years, or is this something that is going to tells us something about the future? Is this a start of something new, or does this reflect the fact that kind of an old regime was sort of struggling to let go? And I'm sort of the view that it's most likely the latter. In other words, this is kind of one faction in the ANC that has been, that is at risk of losing a lot and trying to hold on, and as trying to kind of basically last ditch effort at kind of holding on to power. But that is just my interpretation. Obviously, we still have to wait and see what happens. I think the one thing we mustn't underestimate, though, is that we have a very strong global economy at the moment, because as much as South Africa is exiting the COVID phase and kind of clawing our way out of the damage, the rest of the world is doing so as well, and is doing so with gusto and with immense policy support. So those trillions of dollars of money that was been pumped into the economies by governments, especially in the rich countries. Okay, so you've got a very strong global growth environment at the moment. The IMF expects it to be about 6% global growth this year, which would be the strongest on record. And that should carry over into next year. So very supportive global environment. And in particular, we've seen commodity prices really rise very sharply. So, South Africa, despite everything, remains a mining country. About half of our export revenues come from commodities, the likes of iron ore, gold, platinum, PGMs. So it's platinum, palladium, rhodium, and associated metals, as well as coal. We're a big exporter of coal, and then also, some smaller items like manganese and chrome and so on. But anyway, so you've had this big jump in global commodity prices. And this is really unexpected. So if we had this conversation a year ago, I think we'd all be really down in the dumps. But today we've got this tailwind of just very high commodity prices, and that has, you've seen the rand strengthen a lot. You've seen the JSE is close to all-time highs. And these commodity prices obviously filter into the profits of mining companies, and that has supported government's tax revenue. So now we're back to the tax revenue discussion. So the recent announcement that, the sort of the post-unrest rescue package that was announced, I think, a week ago or 2 weeks, that has basically been funded by additional tax revenues that come from the mining side. So in that sense, we're really fortunate. This is just pure luck that there's this global commodity boom at the moment, and South Africa is a big beneficiary of that. Now, will it last? I don't know. I think it can last another year or two. I think partly it just reflects kind of COVID distortions, but there is some element of it that seems more permanent, in the sense that the world has to transition to green energy. And that means basically rebuilding a lot of our energy infrastructure, which obviously needs steel and copper and nickel and so on. So there's going to be some structural demand for some of our commodities. Obviously, we also need to reduce our dependence on coal. So it's not good news for all the commodities. So I think the outlook for South Africa. Sorry, one more point about South Africa. And you must just stop me if I'm going on too long, because I know we're on a tight timeline. Obviously, the other thing that helps the economy is that we've got the prime interest rate is at the lowest level in 50 years, and that's obviously Mason will talk about property in a minute, but that's obviously great news for the property sector. You've got the lowest interest rates in 50 years, and I think interest rates will remain at near these levels. I don't think they'll remain as low as what they are now forever, but I think they'll remain fairly low over the medium term, just because inflation in South Africa is still under control, and therefore the Reserve Bank doesn't need to raise interest rates aggressively, whereas in some other emerging markets, you've already seen interest rates go up quite aggressively. So that is another positive, and that is supporting kind of the household side, our consumer spending side of the economy. Okay, and then just finally, in terms of investments, I mean, obviously, I come from the kind of the financial markets world, so for me, I always think about kind of equities and bonds and that kind of thing. Just a couple of points here. The first one is obviously, when you're thinking about investments, you need to think about your own financial goals, your own financial objectives. I think that's kind of always the starting point. Is not to say what's the great opportunity, but the starting point is, well, what do I need? How much money do I need when I'm retiring or saving for my kids' education or whatever? So start with that endpoint in mind. And obviously, we, from Old Mutual's point of view, we'd always say that financial advice is important, but it's particularly important to help you figure out what it is that you need. It's not always about the product that you're getting, but it's just kind of understanding your own needs. Because if you can talk to someone about that process of coming up with what are my actual financial goals, what do I actually want from life. It's in the end, it's not really a financial discussion. It's almost a sort of a psychological discussion. So that's the first point. The second point is, I think South African investors completely overestimate the impact that local political and economic developments have on their investment returns. So again, the case of the Finance Minister, in the bigger scheme of things, that is going to have a very small impact on your portfolio. The bigger thing that's going to have an impact on your portfolio is, for instance, what is happening with interest rates in the US. What's happening with politics in the US. So global factors, commodity prices, global demand, global growth, those are much more important for your investment portfolio than, whatever's happening in the Union Buildings or Lutuli House or Parliament. And I think thirdly, I think what the last year or so has shown us is just the value of those very old investment principles that people always speak about, but being diversified and just kind of staying in the market. So early March last year, markets crashed. I mean, global markets fell by 30-40% because of COVID. But they recovered very, very quickly. And the worst thing you could have done was to kind of sell out after the crash and miss out on this tremendous rally that's taken place since then. So, I mean, I will be perfectly honest, I did not foresee the COVID crash coming. But I would also not have foreseen the fact that the markets rallied so quickly. So I'm very fortunate that we just kind of sat through the whole business. We fell, but then we recovered, and we didn't do anything in terms of the funds we managed. And I think that's a very important lesson. The other one was just, again, the diversification story, because if you think about over that period, initially the rand weakened a lot, so your global investments benefited from a weaker rand in your portfolio. But then the rand strengthened again in the sort of from late second half of last year into where we are now. The rand strengthened. So then your South African assets actually are. So if you had a mix of local and global assets in a portfolio, you would have done fine. So I think that from a diversification point of view, again, remains very important. So just as a concluding remark, I think if you think about a typical South African portfolio, balanced portfolio of equities and bonds and listed property and so on, the kind of thing that you'd find in a typical pension fund. I think the prospects for returns are still pretty good because we have a global economy that's growing. So that is always good. But also the South African element of that portfolio is still quite reasonably priced. So if I look at the valuations on the JSE, for instance, they look pretty attractive. South African bonds are very attractive. Now you might argue they're attractive for a reason. People don't want to own them, but I think history shows that when you buy assets that are cheap relative to their intrinsic value, you should get good long-term returns on those assets. Globally, global investments are not that cheap anymore. In fact, if you look at the US equities, for instance, it actually looks quite expensive. So I think you should mark down your expectations of long-term returns from something like US equities, for example. But again, if you put all this together in a diversified portfolio, I think the outlook for investment returns are actually pretty good. So I'm actually a lot more positive about things than I have been in quite a while. I mean, I'm going to stop here because I don't want to overstay my welcome. But yeah, we can see what questions there are.
We stopped you just as you said the word positive. Cut. So thank you so much. Obviously, I'm sure that there are lots of questions, and it's very much an overview of where we are. Could we hold on those few questions I have? I think I have a number, tax revenue, the shrinking tax base, and what other types of opportunities there are. Is SS still a good property investment? But I think at this point, what I would like to do is to, Mason, I think where we stand now is we're saying that there are opportunities within the South African market based on whatever your investment needs might be. And there are many ways in which you can get involved in the property industry. And this has, over the last few years, there's been an increase in the number of ways. And one of them, which we've seen the success in a similar sort of, not the same, but similar hotel scheme, is the Capital Group, where folks, instead of investing in a property, they invest in a hotel room and they look for different types of returns. So perhaps, Mason, at this point, you could come in and talk a little bit about this opportunity, and then let us bring the questions at the end where we can perhaps ask Isaac a few questions around Mason's solution. Can I hand over to you, Mason? Don't forget to just unmute yourself.
Hi, thanks. Yes, I'm unmuted. Yes, thanks, Louise. Yeah, there are a couple of these hotels that's been popping up. It's not something new. I was involved in a couple of them. I think once we've looked at the intro video, we'll just go through the whole mechanics of it, and how it works and how it puts together, and what makes this one uniquely different to all the other offerings, and in terms of where we've pitched it in the market and what Plet can offer. I'm happy to talk about that.
Julie, would you like to play that video? Thanks, Nikki. So Mason, wow, maybe you could tell us a little bit more about this wonderful development.
All right, thank you. Thank you, Louise. Yes, thanks, Jamie, Lee, and Louise, for the opportunity to just present a pre-launch at Estate Living. I'm going to try and give you a brief outline of Plett and the development and the mechanics and some of the stats pertaining to this exciting opportunity, I think first, about me, my name is Mason Lecuona. I'm a quantity surveyor by trade. Before that, I worked for Murray & Roberts. I worked in the construction industry. I left then, I joined the Liu Group, which is a quantity surveying firm, where we did pre-contractual work predominantly. After my stint as a quantity surveyor, I joined BOE, Board of Executives, which later became Nedbank. Corporate Property Investment Partners, and I was actively involved in the top property developers, became their partners as a catalyst for the bank to grow their loan book. After my stint with the bank, I joined Mapani Developments. Well, I actually opened up the Gauteng branch, which I started, and we did quite a couple of developments where I was a partner and shareholder. And that was a couple of various developments that we did. Mapanya Mall is one of them, Mapanya Motor City, and quite a couple of others. Michelangelo Towers we did with a bank. Anyway, so that's a brief background of me. It's a bit more colorful than that, I hope. Anyway, so the Signal View Boutique Hotel, I think anybody that's familiar with Plett, the property is situated on the very top of Signal Hill. It is an iconic landmark, but obviously for the wrong reasons. It's been blotting the landscape of Plett for more than 30 years. And I can happily say that after 5 years of town planning and to and froing, we finally got granted our rights to develop an 18-room boutique hotel. And this hotel is aimed to open at November 22, end next year. For obvious reasons, town planning took quite a long time, and obviously the pandemic also had a bit of a damper on it. But I think it's worked in our favor, and we'll get to that a bit later. If we look at Plett as a town has changed considerably. I mean, the population has grown from 6,500 locals in 2011 to 60,000 in 2019. And although 60,000 is a lot, you must also realize that it's more than tenfold that the population has grown in 8 years. All right. And the reason for that is obviously it's grown exponentially due to remote working, and that's spurred on by COVID. But I think also a better lifestyle and getting away from Plett, and technology has actually made it possible that somebody can move to Plett. You've got an airport that is an hour away. If you're in Joburg, you take an hour to get to OR Tambo anyway. So it's really not that far. And the other thing is, Plett is arguably probably the most sought after holiday destination for local tourists, and it has got a considerable international following, which has been absent the last 2 years. But hopefully they'll come back, and hopefully by the end of 2022, South Africa and the globe will all be fully vaccinated. Anyway, the hotel. Let's touch on the hotel design. The hotel is basically an 18-bedroom boutique hotel. The bottom 3 floors, if you looked at on the video, and we can send you some pictures later, will house semi-self-catering suites ranging from 40 to 75 square meters. To put that in perspective, a room in the Beacon Island Hotel would be 26,000 square meters. So it's close to almost double the size of a Beacon Island room, and their room sleeps 4. So I mean, but although we don't cater for that type of market, we're more upmarket, bespoke, and boutique-ish. The majority of these rooms will be interleading, and it would be semi-self-catering, not full self-catering, and with the normal bells and whistles that goes with a 5-star boutique hotel with room service, in-room dining, best Wi-Fi, etc., etc. The 4th floor on top of that would obviously boast a 5-star fine dining restaurant, which will not a very big one. We're looking at a 45-seater maximum, and that will obviously it will house the bar area, and it will house the restaurant, and it will house the hotel reception, and obviously ablutions to that floor and the general manager's office. The top floor, now the top floor is the 5th floor, which has got the best view of the whole area. And this top floor would be exclusive to guests only. In other words, only people that stay in the hotel will be able to utilize the facility on the top floor, which has a bespoke bar, a dining area, a private dining area if you'd like, a sun deck and an infinity pool. And which makes this difference is this is exclusive to the hotel guests or the owners, and the top floor would also be owned by the owners that own the rooms on a pro rata basis. From an investment point of view, and I just want to touch on the investment opportunity and how it'll work. The investor would buy a unit through a VAT registered entity in order to claim the VAT as a rental enterprise, and he would enter into a rental pool agreement with a hotel management company. The claimed VAT input that he would get would be then utilized by the developer to furnish the unit in line with a bespoke 5-star boutique hotel. The owner and his guests would be entitled to use the unit anytime that he would like, but he would have to book the unit because obviously it's run as a rental enterprise in the business. So he'd obviously also go and say, I'm the owner, I'd like to book it for a month on that day, from that day. And obviously when that happens, his unit would be taken out of the rental pool for the duration of his own use. All right. Should his specific unit not be available, and it does happen, people book last minute, and it does happen, a similar unit would be offered if available. In addition, the owner will be liable for 30% of the current hotel rate at that time during his occupancy. And the reason for that is, although it is his unit, it is still being serviced as a 5-star hotel. The beds are changed, the laundry's been done. It's still a serviced hotel, and obviously the hotel management company does have costs in terms of that. Obviously, with a sectional title unit like this, the owner will be the sectional will be part of a body corporate, just like any other sectional title scheme, and it will obviously be run by that. Now, if we look at the occupancy rate, and although, and that's where people have got a misconception of Plet. Plet has tourists in Plet 365 days a year. There's always a tourist in Plet. Although Plet does have 3 seasons. It's got a low season, it's got a high season, it's got a peak season. All right. Now, we've worked on the low season being 6 months of the year, although a lot of hotel operators argued before COVID that their low season was 5 months of the year. In terms of our feasibility and being erring on the conservative side, we've taken 6 months of the year of being low season. All right. We've attributed a occupancy rate of 35% for those 6 months. Then we come into the high season, which is we've attributed a 65% occupancy in that period. And then we obviously come to the peak season, which is your December and 2 weeks into January, which we've attributed 95% occupancy. So if we actually take the weighted occupancy over the full year, we're looking at a 50% occupancy, which I think is quite conservative. And it's quite conservative if I say it, not in current occupancy levels because of COVID, but pre-COVID, the hotel rooms or the hotels operated at a occupancy of between 60 and 68%. All right. So the other point that we're going to make is the management team will also have the luxury to market the hotel for at least 12 months before opening, which will obviously be the construction period. So they'll be focused on getting occupancy in and marketing the hotel to tourists. And hopefully by that time, we shouldn't be in the same situation where we are now. So if we look at the income forecasts, the income forecast that we've basically used currently is we've only used our income forecast based on what we can get at the local tourist market. Having said that, I've been quite close to some of the hotels that are run in Plet, and they've actually had quite good winter season, which is unheard of because of the demand of local tourists wanting to get away because they don't have any other place to actually go. So they actually frequent the local market, and Plet is obviously on the top of the list. So if we look at the competition in terms of Plet in the hotel, there's actually only one real major competition in my view, and that would be the Plettenberg Hotel. And the Plettenberg Hotel would be the only hotel that actually competes in terms of the view, the offering, the 5-star rating, and there's only one. To a lesser extent, you'd probably enter the Rectory, got a good location, no view, but it's probably rated a 4-star. The Sky Villa is quite good, and the Grand to a lesser extent. So what we have done in terms of our income forecast, we've taken our closest competitor, and let's call it the Plettenberg Bay Hotel, and we've taken their sea view rooms and the same size for size, and we've basically looked at their current asking price for the 2021-2022 season. And this was done to basically see what the worst case scenario would be, to only have local tourists. So we've taken those hotel rooms and we've basically halved it. All right. So as stated previously, during the peak season, there's quite a lot of people that descend on Plet. I mean, Plet's got a population of 60,000, but during the peak season, there's between 180,000 and 200,000 people that descend on Plet from all over the country, and hopefully by the end of 22 from all over the world. And our research has shown that Plet is not at all sensitive in room rate during the peak season. The December first 2 weeks in January, they're not sensitive at all to rate, to the rate and what you ask for a room. It's basically the supply and demand working through there. They are, however, very, very sensitive to the low season. And that's obviously why we've taken a 35% occupancy. And furthermore, we've halved our competitors' rates. So if we can have a better product at half the price, we should surely better that occupancy rate. Now, with the above conservative outlook, we've still achieved a projected first-year yield, inclusive of the VAT amount of 9.25%, which I think is actually not too bad if you think we're borrowing money at 7.5% at the moment. All right. A bit about a management company. I've been involved in quite a various hotel schemes. There's been the Michelangelo Towers in Sandton, which was run then, you could put that in a rental pool, which was then operated by Legacy Hotels. We developed the Rex Hotel in Knysna, which 3 cities managed for a while, which hasn't been a good match. That's been taken over by our group. And I even owned a unit in the Cape Town foreshore called the North Wharf, which is a pretty hotel. And I'm probably shooting myself in the foot, but I mean, I think our investors should know this, and we've got to play open cards. And it's common knowledge that only a few of these hotel investment schemes have actually yielded the projected returns. And I mean, I've owned one of them, and I can put it down to a couple of points and why Signal View would be actually different to the others. All right. Firstly, you've got big hotel management companies that only manage the hotels with no real incentive, and they don't have any skin in the game. And to this end, myself, the developer, we will actually retain 2 units in the rental pool. All right. And to make it even more even, these 2 units will be the last 2, all right, which the investors don't take up. So they usually are the more undesirable ones. But I'll actually do that because I actually believe there is not a bad room in the scheme, and I really, really believe in this development. In terms of the management, I've put together a very strong management team that will focus only on the occupancy and the service of the guests. The food and beverage service has been outsourced, all right, to one of the top restaurant owners. I can't reveal his name as yet, but that would be a separate focus. And although you're reporting to the general manager in terms of quality and service, and he'll sign off on the menu, it won't be run by the general manager. The general manager's sole focus would be getting guests to occupy the rooms and ultimately to get investors superior returns. That's his idea. That's his task. Then, which is a very, very interesting thing, usually the owner of the hotel purchases the unit, all right. What we've actually got is the ownership of the top floor, which is the 5th floor, which is basically the crown jewel. The hotel room owners would actually take ownership of that top floor on a pro rata basis. So any income derived through a wedding venue where they use the top floor as a wedding venue and they occupy the rooms for that, conferences, parties and event rental, all that income will accrue back into the rental pool. And our research has shown that Plet is in dire need for a bespoke venue that doesn't have many to choose from, let alone any to choose from with a view like that. So, and furthermore, the days of 200 guests at a wedding are gone. 50 to 75% max are norm these days, and we've probably got the best venue in Plet for that type of thing, and that would then get back to the investor as well. So he'll get some income out of something that is exclusive use, and to get him additional revenue and get a good return. Furthermore, the management agreement that the investor would enter into would actually cater into an incentive based on the net income. So it's not going to chase the gross income. It's going to chase the net income for the hotel investor, and the net income would then incentivize him to say, all right, I've got to cut my cost, and I've got to increase the revenue, and as sure as he does that, that all trickles down to the investor so that he can get an enhanced return. Right, so that is Signal View Boutique Hotel in a nutshell. I'm sure there might be some questions that I'd be happy to answer.
Yes. Thank you. So just right off the bat, can I take us back one step? You mentioned that you purchased the unit in a company. I know we just keep our eye on the time there. You purchased the unit in a company. So does that entity, does that mean, and this is probably like this ignorant question here, but can I still go and get financing around this unit?
Sorry, just do cut off in the last bit.
Can I, if I'm interested in purchasing this unit, can I still go and get financing?
Yes, absolutely. No, it'll be a company, and the reason why it's also in the company is twofold. Let's say I'm going to buy a unit, and the 2.5 million or 3 million is a bit too rich for me, but I've got a friend that's also quite interested in something like that. We can actually buy a company. We're 50-50 owners of the company, and we alternate the use of it. And if we don't use it, it gets into a rental pool, and we still get a return on it. So you easily get finance for it. It's been done through the North Wharf, as I said. It's been done through Michelangelo Towers, the Rex Hotel in Eisner. There's quite a couple of them. This jumped up quite a lot with the Section 12J companies, which they've put a stop to it. So yes, it's just as easy as buying a house. It's buying a hotel room. And how have you found, so from a bank's point of view, obviously as a developer, you've gone and taken this development to different financial institutes and presented it. Have you found that the banks are supporting this product? Interesting, and thanks for asking that. All right, that's actually quite a big stumble block, and that's actually why we are here, and that's why this is an investment proposal that I put it. We all know what the pandemic has done to our globe. It's been an absolute nightmare. Banks are not funding retail or hospitality at this point in time. They will fund units, but they will not fund a hotel and say, yes, we will fund the hotel. There's the operator, and let's fund it. They would fund units in the hotel. And the reason for that is they're too busy with their first aid kit. They're helping Togo Sun, they're helping Protea, they're helping City Lodge. They really are bleeding, and they're not funding anything new, even if it is a very, very good transaction. They want the hospitality industry to actually settle first before they look at something else, which is actually quite an interesting thing that Izak brought up as well, is when we all saw the market crash and everybody flocked and they sold, we never realized it would pick up and then pick up and go past the threshold that it fell. And we are actually there. We are in a pandemic. Everybody's running away. Everybody's selling, and it's panic mode. And we actually should not be like that. We should actually look at the future. We should sit and say, what is going to happen in a year's time? We're almost close to 10% vaccinated, and we're lagging far behind the rest of the continents. We'll get there. We'll get there in 17 months' time when this hotel opens. We'll actually have our borders open. We won't be on the red list anymore. And we've got to look at that. We've got to look at that. And I'll tell you what, there's overseas people there that are really, really hungry for travel. You can only go to so many places in London.
There's local people who are really, really hungry for travel in this house. Local people. It's like, would you agree with that sentiment?
Yeah, I mean, there's an old saying, markets that the best time to buy is when there's blood in the streets, which is maybe a bit extreme, but I think, yeah, as a general principle, I mean, it might seem counterintuitive that you buy into an industry that is completely decimated, tourism, leisure industry, but it's exactly the right moment when, that is typically the best moment to buy, because you as an investor, you have your pick of opportunities, and as Mason said, things can only get better from this point. The local tourism industry can only improve from what has been a historically bad experience. Obviously, it's dependent on vaccinations, etc. But yeah, I mean, there can only be upside for tourism and related industries, given where we are at the moment.
Absolutely, and I think looking at the property there and looking at the views, you're also quite right. From an additional income stream of venue hire, etc., it is certainly very beautiful. And I mean, the Marina, I mean, the Marina Bay Hotel in Singapore is an example to use, where you've got this magnificent rooftop area with a pool looking out over the city and spectacular views. That in itself has become a tourist attraction within that town to get there, and to be able to access that rooftop pool, you need to be staying at the hotel. So it's certainly worth a few nights at the Marina Bay, and I'm sure that this hotel will certainly become the Marina Bay of Plettenberg Bay. I hate to bring this conversation to an end, because there are so many questions I'd like to ask. But moving forward, we have recorded this webinar. We will be sending it out. We will share the details of Mason Izak with all those who attended, and then all of those who requested the recording as well. And so that we can then direct any questions regarding this wonderful opportunity directly to Mason and the team. We have sent some information out during the webinar, so you'll get a good grasp of what it is, but we are more than happy to share his details. Folks, thank you so much for attending, and thank you so much for the panelists for being part of this morning's Expert Insight series. We continue to bring them to you on a weekly basis, looking at the industry and all the different opportunities within. And thank you so much, Mason and Izak, for being part of this journey with us.